The Fed did cut rates by 25 basis points, as widely expected, and suggesting 2 more cuts would come by the end of the year. That was kind of the median consensus call among the committee. Joining us now, Jeremy Siegel, chief economist at Wisdom Tree and professor emeritus of finance at the University of Pennsylvania's Wharton School of Business. Jeremy, it's good to have you this morning. I guess we can, if you want to just follow the market's verdict, you often don't get a clean read on the market's reaction to a Fed decision until the next day. I guess 25 basis points was the right call?
Yeah, I mean, they are happy. Let me tell you what really interests me here, that Chris Waller did not dissent in favor of 50 basis points. Remember, he is the front runner, or very close to the front runner, to be called chairman. And not being more aggressive here, I'm just wondering how Trump now would look at Waller. Maybe I missed it. Did you hear any tweet from Trump about the Fed's announcement? I know he's in England,
no, I don't
but
think so.
I did not see anything. So
no,
I
and,
think
I was going to say there was the one dissent, which we believe Stephen Myron wanted 125 basis points by the end of, 50 basis points this meeting, and then a good deal more the rest of this year. But there was some thinking ahead of the meeting that, one of the outcomes could be that, Waller and Michelle Bowman, whoever might have wanted a more aggressive move, could kind of get the statement to frame things in such a way where it's just, look, this is sort of a process most likely, and not necessarily have to have the dissent. So I don't know if that means much to the markets in an immediate basis. It basically, rates are tilted lower at a time when the economy still seems to be hanging in there. We're anchoring to the soft labor market data, which is giving you, an impetus to actually try and take out some of that risk management insurance that Powell talked about, and yet not really respond to any kind of economic emergence.
Roger Ferguson said one of the non-voters, something with the dot plots, which indicated
he didn't even want
to cut.
He or she did not even want to cut.
Someone wanted 50, someone wanted nothing. So
yeah.
Kind of a fractured.
We don't absolutely know it was a non-voter. You could presume it. Maybe it was just a show of unity, saying, "Hey, we're with the chairman," and Steve Myron is the only one. The recent appointee was the only one that dissented. It could be a show of support for Powell on all the potential dissenters. It's sort of interesting had Myron not been there, the interference had not been there, maybe there would have been some dissents. I thought there were going to be some two-sided dissents, more on 50 and maybe 1 or 2 on none. Don't forget, I think that there's 6 or 7 that don't think there should be any more cuts after this year. And one then, of course, said that I think we shouldn't have cut at this particular juncture. But they all united, and then only President Trump's recent nominee was the only dissent here. So it could be it could be kind of a this is the way we work things, and I'm interested to see how Trump will respond and whether Waller moves down, and whether we're going to get several of the others that have been
talk about the markets, Jeremy. Talk about the market, Jeremy. I told Mike that this is, in the history of the world, this is today the best time to have ever been in the stock market. I'm just saying, because we're going to hit new highs, and Mike pointed out how many did we hit last year? We hit
55 or something
but,
like that.
None of those new highs were as high as today's new high, Jeremy. So this is as good as it...
Listen, whatever negatives, is coming from the tariffs, and they don't appear to be as negative, certainly, as we feared at the beginning, are being offset by the positives of the Trump policy, particularly that tax bill, which was really so favorable to corporate earnings, the deregulation promises, which are, also very, very favorable. By the way, the lower dollar is also very, very favorable to U.S. stocks, since 40% of the profits come from abroad. So, all the negatives from the tariffs are more than offset by the positives that are going on in the market. And so we are up 10%, I think, from when Trump won the election, and at new all-time highs. And listen, at a seasonally weak time, which is the last half of August and all of September, to continue to hit all-time highs is very, very positive, I think, for year end.
Yeah, that would be the the playbook. Yeah, that maybe you get a stutter step and then year end should probably follow through to the upside. Professor Siegel, thank you very much. We're going to have to run 7% of all days since 1952. The stock market's been an all-time high. 1 out of 14 days. Imagine that.